Hello and welcome back. This is Christopher Aaron, your editor for this iGold Advisor update. We will be talking about the gold price and the US dollar in this update. It is October 6th, 2022. I hope that you are doing well. Before you go any further, make sure to hit the red subscribe button and the bell icon so that you will be notified when these videos come out. And make sure to take 1 second to subscribe to our Twitter feed because you can see I don't always have a chance to post these videos here on YouTube, but I often have a chance to do quicker updates on Twitter. The handle is iGlobalGold on Twitter. Legal disclaimer, briefly. And let us look at what has happened here with the gold chart over the last couple of weeks. There was an interesting announcement out of the Bank of England about a week ago where they said they're going to, despite the inflation, they're going to start printing more money to bail out some of the pension funds over there in Great Britain. And so the markets took this to mean that perhaps not only is the Bank of England pivoting right now in their supposed efforts to control inflation, but perhaps this means maybe the other central banks of the world are going to pivot soon as well, including the U.S. Federal Reserve, which would be the big one when they finally pivot. And so we've seen a recovery, basically a reversal in everything that was happening over the last several months, which has basically been everything down: gold down, silver down, gold miners down, stock market down, cryptocurrencies down, commodities down, everything down, and the US dollar up. We have seen a reversal of that here over just the last week after this Bank of England announcement. And so the real question is this true? Is this Bank of England announcement really the start of the shift of all the central banks from trying to control inflation to saying, you know what, we don't care about inflation, we're just going to print more money? Is this really the moment, or is it still 6 months, 12 months into the future or so? This is the big question. Well, for the moment, the gold market has given us a very interesting signal here. And you can see we were talking about this last time, that after the 2-year consolidation, 2011 to 2013, the breakdown then saw a waterfall decline leading to a 5-year bear market where gold lost almost half of its value. This time, following this Bank of England announcement, we have in the works the making of a false breakdown in gold. I never say that the charts are going to stay the same one day to the next or 1 week to the next. There's always new data to analyze, which is why I so strongly feel that this is a discipline that deserves your attention week in and week out. That said, we see here the making of the possibility of a false breakdown, which would be very good for the precious metals, very bullish for both gold and silver. That said, there is still a lot more work that gold needs to do to solidify this false breakdown. So what I want to do is zoom in to the last 4 years here of price action so we can take a cold, hard look at what gold needs to do from a technical standpoint to fully eliminate the bearish case, so that we can move beyond worrying that gold is going to move lower and talk about how much higher it's actually going to go over the years ahead. These are the levels that we must watch for. So you can see right here that we have recovered that 1676 to 1680. That was the black double line here. That is step 1 out of 4 that need to happen to turn this chart fully bullish. The second level that we are going to be watching for that needs to be overcome by gold is this former rising trend out of the 2018 lows. You can see very clearly that was broken lower right there just 2 months ago in August. So this is a still valid broken trend that gold is on the opposite side of right now. This is going to be one level that gold needs to overcome, which presently comes in at 1750. I will define these levels for you in just a moment and put them all here on the chart to see. But this level comes in at 1,750. The next level that gold must overcome to switch this chart to be fully bullish, to eliminate the possibility of further declines. We were talking about down to the low 1400s or perhaps down to the 1200s. To eliminate that possibility, gold must also overcome the primary declining structure, which began shortly after the 2020 peak here at 2,075 per ounce. And you can see by the number of hits on this trend here, 1, 2, 3, 4, 5, and then something anomalous happened here in early 2022, which in fact was a false breakout, as the war premium on the invasion of Ukraine by Russia was fully given back by the market. And not only that, but the market then broke back below this trend, and then respected it one more time right here. So that's 1, 2, 3, 4, 5, 6 hits with a false breakout, as World War III did not manifest, parentheses, at least yet. And so this level right here is the second level that gold must overcome to turn this chart bullish and eliminate all that downside potential. The third level is right here where my mouse is, where you can very plainly see, let me highlight this, that gold is in a very steep primary declining channel still at this point. You can see that. These highs are coming down, the lows are coming down. So, in sum, this potential for a recovery here is a good start. We've seen the first data point recovered, which is 1680. But gold must recover these following levels to eliminate the downside potential. 1725, that's the primary, very steep channel resistance. Gold was rejected by that today. You can see it failed to hold above 1725. We were back down at 1711 as this is being recorded. 1750, I said, was the lower boundary, the broken rising trend going back to 2018. And 1795 is the primary declining structure from 2020, taken into consideration the best fit of this trend. Where did the sellers show up? And obviously we had an anomaly here for the war premium that was given back and then respected again. So if gold can break higher through all of these levels in some sort of an impulsive kind of way like this over the next several weeks, I then believe what will happen is we will not break the all-time highs here on a direct first attempt. It will back off one more time, and then we will get geared up to get ready to go for sure sometime late 2023, approximately a year from now. And so the thing is that if this is going to happen, think about this with me for one moment. We don't need to guess about this. I mean, gold's at 1711 right now. The upper level here is 1795. That's only approximately $85 away from where gold is trading right now. So as investors, traders, we have the luxury of waiting at this moment to see if these levels are going to be eclipsed. Because if we wait and see, and this ends up happening, then this is full game on, bases loaded, perfect pitch, coming right down the middle with a very solid hit. And now we just sit back and we say, how high is this thing going to go? That's if we recover these levels right here. However, If we do not recover these levels, there is something that can happen in technical analysis where you see a first breakdown like this that gets recovered as it is, setting the stage for a false breakdown. But then if you fail to recover the downward structures in the market, the uppermost level of which comes in at 1,795, I have seen this happen. If you fail to recover the downward structures after a false breakdown, a market can then roll over and see that decline happen just a little bit later in time. I have seen this happen before, and it is why I am being so strict that gold must recover these levels in order to turn the chart bullish. So, watch these levels with me over the coming weeks and prepare. Hope for the best, but prepare for the worst. Because if we get the best, 1795 broken on dual weekly closes, if we get that best, we haven't missed the entire move. You know, it's not like at 1795 gold is already above 2,000. No, it's not like it's at 2,100 or 2,500. There's going to be plenty of upside to come if we get that confirmation signal. We need to get it. Now, if we fail to get it and we get the rollover scenario where it just delays the pain, and this market had a mini false breakdown here, but we get the legitimate breakdown a few months from now, I think the reason for that would be the dollar. Now, we all know the gold market and the dollar don't always trade opposite each other every single day or every single week or every single month. But on longer term time periods, they do tend to move opposite to one another. And so this recovery here that we've seen in gold over just the last few days has happened precisely as the dollar has formed a short-term peak right here, exactly where it should have, based on the simplicity of a single line that I have had drawn on this chart for the last 5 years. Is it any doubt that this market formed a short-term peak right here at a line that matches up exactly to this data point, and this data point? I think technical analysis gets a bad rap sometimes because people make their charts way more complicated than they need to be. In my experience, and this is my experience only, but in my experience, trends are the most powerful form of analysis that we can do. When is a trend still valid and when is a trend broken? And you can have trends that are dynamic, they're moving in time. You can have trends that take on parabolic characteristics. You can have trends that are flat or horizontal. But when are trends broken and when are they still valid? If we focus on that, I'm telling you, it eliminates 90% of the guesswork in the market. So it's logical that the dollar has formed a short-term top here. That said, if you look at the previous times that the dollar formed short-term tops along this trend, you can see that a short-term top absolutely does not mean a long-term top. It absolutely does not. For a long-term top to form, we need, yes, a hit on a resistance boundary, but then we also need a host of other factors to come together. It would be nice to see horizontal resistance coming together, which you can see we have right here, 119 to 121. It's also generally favorable to see a topping pattern, an independent topping pattern, such as a head and shoulders pattern, a wedge pattern, a horizontal consolidation that then fails to the downside. So when you take the combination of rising resistance, horizontal resistance, and then an independent topping pattern, we can start to talk about has a long-term top formed in this market. Right now, the way it looks to me for the US dollar is that given that this is going to be at least a short-term top, it looks that the dollar wants to consolidate for perhaps a couple of years even. But at this point, it looks to me like after that consolidation, similar to what we saw back here and back in here, it looks to me like the dollar wants to make another run at this level here around 120, 119 to 121 to be exact, all the way up here going back to the 2001 peaks. So if this is the case, it makes me suspect that there is still the risk for downside in gold after this pause. However long this pause is going to be in the dollar, whether it's 2 years or 3 years or whether it's 2 or 3 months, I have no sign of a long-term top for the dollar yet. That is the point. And given that, it looks like the dollar has room to move to the upside after consolidation, and therefore I believe we should be careful of getting too bullish on gold until those distinct resistance levels are broken on the gold chart itself. And of course this goes for silver, and of course this goes for the silver miners, but I've been and the gold miners, but I've been talking over the last few weeks about how gold is in the driver's seat here. The chart is much more clear for gold. When gold breaks these levels, it'll be game on for everything. But we must focus on the gold chart at this time. And remember, I defined those levels for you. 1725 will be step number 2 out of 4. 1750 will be step number 3. 1795 will be the final step that gold needs to overcome to eliminate a bearish scenario still for the precious metals. And please remember, those levels change in time because as you saw from the graphs, the trends move in time. They get lower, they get higher, and so those figures, what I'm telling you right now, a week or two from now will be different. So I hope this has been helpful to understand where the gold market is at this exact moment of time. But if you don't want to wait 2 or 3 weeks until the next video and you want to know where we are every single week and when these trends break in real time, this is why I offer Precious Metals Intelligence Plus. It is a premium weekly research and analysis service that goes out to members 50 weeks per year by 8 a.m. Monday morning. And remember, we were opening defensive positions in Precious Metals Intelligence, and I want to update you, we have closed them for now. And so these defensive positions that we closed already, we made 121.6% profit on one position and 67% profit on the other position in 6 weeks. And we may reopen these trades again if gold rolls over here. So this is not a typo. I can show you the verified figures. All of our premium members had access to these trades. We made over 100% on one trade and 67% on the second trade. What? As gold moved lower, not moving higher. So this is how you can protect yourself on the downside. And what I'm saying is, if you would like to participate in this with us again, if gold rolls over, you will receive the exact flash updates when we make these decisions in real time by being a member of Precious Metals Intelligence Plus. If you are a higher net worth investor, this is the time period to consider establishing a private placement portfolio, because these private placements come with them free warrants. Yes, free warrants. And each warrant gives you nearly 2 times the upside of the open market gold and silver mining positions that one can make. So if you just go out and you buy the same stock in the open market, and let's say you get 100% return, great. But if you had the free warrants alongside with that, you would get almost a 200% return on that, of course, depending on the strike price of the warrants. But generally, you're receiving a full free warrant with these private placements. Remember, this includes a free Precious Metals Intelligence subscription, so you will not miss out on all the open market stuff that we do, but you really need to check out the private placements as we are in this window here, because once gold takes off, if we get the takeoff scenario, then I'm convinced that companies are going to stop offering warrants. And so there may be a limited time here to accumulate these warrants for free. After that, it might be, hey, sorry, talk to you 10 years from now. Guys, if you would like to speak one-on-one with myself, Christopher Aaron, you can always reach me on the consultations tab of the website. We sit down like this. We talk for 30 or 60 minutes. If you're not sure which of these services would be best for you, we can sit down and look at your situation. And I don't have any reason to push you in one direction or another other than to offer to you what I would do if I was in your scenario. That's the best I can do. And a lot of people have found it helpful just to have someone sit down and talk to them from an independent perspective. So you've got the levels that we need to watch for on gold. If we can exceed those levels, the highest being the most important, which is 1795. If we can exceed those levels, then this is going to be the window right in front of us that you want to be establishing your precious metals portfolio and finalizing it, including with the leveraged mining sector purchases and warrants, depending on the most appropriate method for you. If we do not exceed those technical levels, you should consider joining us for the next protective trade if you would like to make profit as gold is falling. Consider it, guys. Everyone has to make their own decisions and do what is best for them, but we have a system here that is working for us on the upside and on the downside, and I hope that you will join us in one way or another. Stay well, and I will see you soon.